I think Bitcoin is a very, very risk-related. You try to suppress interest rates, and you could do that because you have had a long period of disinflation and outright deflation also sometimes, which have created an environment where you actually could print money. But the problem is there's an end to all of this, and the end comes the moment when you start to see inflation coming up. And guess what?
One of the most misunderstood narratives in this environment is the idea that Bitcoin is immune to macro forces simply because its supply is capped at 21 million coins. Many investors assume that limited supply plus money printing risks inevitable massive appreciation. But this logic confuses correlation with causation. Bitcoin's rally has not been driven solely by monetary debasement. In reality, Bitcoin behaves much more like a high beta version of the NASDAQ, a speculative tech asset extremely sensitive to liquidity swings. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Well, I think you've seen a liquidity drain because of everything we've seen with the U.S. shutdown. You've seen that has actually pulled some money out of the system. I think there is nothing moves in a straight line, as I normally say. So you'll also see that you have these pullbacks. This was a bigger than I expected. I mean, I have to say that, but I'm still very, very optimistic on the coming month and a half, 2 months as a maximum. I don't think it's going to last much longer. I think we are at the end of what is a super cycle, you can call it. When I say super cycle here, I mean that we have had a number of years, a few decades actually, where this about printing money is something that has been seen as the new, grace from above, in terms of how you manage finance, you manage the economy, and it's not. It's something that you will see that when you start to print money, you will, for a certain amount of time, you'll see that everything feels good and fine, and it'll seem like you can just get wealth, created out of thin air. The problem is you cannot. And if this was the case, you would probably have seen other central banks and other administrations over the duration of the last few decades, not just decades or centuries actually, moving into this kind of thing to make sure that you just have economic prosperity. The problem is you cannot have it, and there is nothing new under the sun here. This about printing money is something we have seen before. Go back in history, you can look into before the French Revolution and so on. There has been these incidents of trying to do something which is just should change the direction of the economy. By the end of the day, what it has done is that it has distorted a lot of capital, a lot of human capital also. A lot of you try to suppress interest rates, and you could do that because you have had a long period of disinflation and outright deflation also sometimes, which have created an environment where you actually could print money. But the problem is there's an end to all of this, and the end comes the moment when you start to see inflation coming up. And guess what? We saw that after the COVID, or the COVID stimulus that came out from not just the U.S. but from around the world, central banks and administrations. So we are at the end of this experiment, which now has one more go. And in this experiment, which seems to have been going on for such a long time, so people hardly can understand and comprehend that is actually just part of the experiment, that since 2008, that was when it really started. And then you have had this in the final hubris of the central banks was in 2020, when they just, came in with, everything. So we are at a very, very big end, but it doesn't mean that it's rolling over tomorrow. The economy is not there where it rolls over just yet. And even if it was, we would still see that the market could do one final and strong push. And I think the next month and the 2 months here, because of the liquidity that is coming out, will help the market actually accelerate into a final blow off top. And I think it's going to be one hell of a ride in the next month or two.
Coin, its price and liquidity. Can you elaborate on that?
Well, there's been a lot of charts on X where people have been trying to tie up M2 with the price of Bitcoin, and they just go 2 or 3 years back and then kind of kept within that. And of course, you always have to analyze everything and understand and go into it. So I do that every time I see something. I try to understand what is it that people are looking at. And if you just took it out a little longer, you could see that doesn't really add up. And it was more people confuse correlation with causality. And that is really the problem with that kind of chart that we have seen. So people try to say, okay, Bitcoin only has 21 million units that will ever be printed, and that's it. And that means that it's a shortage, and then hence it's going to go to the moon. I mean, there's plenty of things in this world that will only be a certain amount of. I mean, right? So it's this about that and then you say, because there is a structure to it. Yeah, but as I understand the technology of it, the Bitcoin structure is not even as strong as in some of the other structures. We have the ledgers so I think the whole foundation or the whole argumentation on this, why Bitcoin should be rising just because the money print we see the debasement, I think is just strange, weird, stupid to a certain degree.
Bitcoin has never experienced a true global recession. If and when that happens, a drawdown of 90–95% is not only possible, but historically consistent with its past behavior. Bitcoin has seen 4 drawdowns of more than 70–75% already. Under severe macro stress, a deeper crash would not be an anomaly. It would be typical.
First of all, if you look to history, again, you can go back to 2001 and you can go back to 2007 also and look at the M2, which people were doing, and then say, how did risk assets perform even though M2 was going up? And you could see that into 2001, 2003, you saw that M2 was rising. The central banks were, trying to stimulate the economy. What did we see? We saw an 85% decline. It was 80% decline in the NASDAQ, which was a risky tech-oriented kind of sector. But people say, but this is different now because it's Bitcoin. If you look to the correlation between NASDAQ and Bitcoin, it's like so crazy. It's like, ice being sold in the sun, right? It's just going together. And you see that Bitcoin, every time NASDAQ has been declining, you see Bitcoin actually also having a bigger decline. So I think you're looking at an asset here which has been rising because of the technologies that we now see and that the hype we have around that, and obviously also to a degree where the money debasement or the money printing has brought out the effect that I talked about, where yields have been suppressed, and you see that a lot of investment, and that brings about the whole bubble that we have right now, as I see we have. So I think it's of course there is a certain level to it, but it's not like because they print money, Bitcoin will go up, because you can easily have the situation like you had into the financial crisis where they were printing money, as you and I just talked about earlier, and you saw the NASDAQ and the S&P kept declining, in that time frame. If it was like that, why wouldn't we see that they have been rising? So people say there's a difference between NASDAQ and Bitcoin. I don't think there is. I think Bitcoin is a very, very risk-related asset, which will decline when NASDAQ and the stock market starts to decline. And that's why I don't think the correlation has been there for some time. The causality is incorrect. That is what people, they like to jump to easy conclusions. But the real conclusion is that actually more, you have something that is highly correlated to the stock market. And the stock market is now, because of the money printing, in a very big bubble. And that's why you're going to see also these curious projects which have zero yield per year, actually delivering something which is, tremendous returns. And on top of that, you have the human psychology. And when you bake that all together, you get these fantastic moves. So I think we have and technically it looks like Bitcoin will come to a massive top. And if it drops below, which I think it can, 10,000 easily. I mean, we just dropped from 125,000 to 95,000, below 90,000 even, right?
It's just under 90,000 right now.
Right. If we see that due to nothing, why wouldn't we think if, we saw a strong dollar rise, a recession, a liquidity crunch, Bitcoin actually crashing much below that? I think it's very, very likely. And that's why I think people have been jumping onto the narrative train and keep pumping each other. And the Michael Saylor of the world is talking about faith, or if you trust enough in it. I mean, this is the kind of narrative you would see into all sorts of big bubbles.
You just said that Bitcoin's pulled back from, was it 125, 126 to now just under 90 as we speak. I think it's gone down at more than $1,000 since we started this interview. Over nothing. Now, when you say over nothing, do you mean over nothing major in a macro sense, or nothing
Yes.
at all in Bitcoin to be able to explain that?
I mean, if something drops by, what is it? 35%. Due to what? Because we didn't see liquidity in the system because of the U.S. shutdown, potentially because of that, and we don't even see it in equities. I mean, what would it?
Equities have pulled back though,
Yeah.
but much less,
4 or
much less,
5%,
right?
in that same front. Yeah, so it's like really nothing. And actually, if that is only recently, if you look to it when Bitcoin started out, it's a decline. It's much more. It actually, I'm not even sure that the equities have been declining that much. But anyway, let's say. It's just that why would we think that when we hit one of the largest potentially crises we could see, where we have a deflationary development, where the stock price could start to sharply decline, and dollar, as I see it, will rise. That's not mainstream. I know that. I think the dollar is going to rise a lot into 26. Why would we think Bitcoin will all of a sudden just rise like, the best thing in the world, and we'll just see that it's just rallying. Bitcoin is a liquidity dependent tool, and yes, but it will also be dependent on whether there will be people buying it. And what we see is that if only a few of the big ones goes in and start to cash out or sell their Bitcoins, you'll see that Bitcoin can take a tumble, and it pulls down the rest of the crypto market with it. So I just don't see the stability in it. And if something can drop which I claim it will, I claim it'll drop more than 95% into the next crisis. And if it does that, what is it really that we're talking about? We're talking about something that is extremely volatile, that everybody thinks is going to be the savior of the world, the financial world, but has these extreme drawdowns. Again, I need to be proven right, but it's 90% is something we have seen it drop more than 73%, 75% over 4 times, right? So we're 90% into one of the worst crises when we have a real recession, which Bitcoin has never seen a real recession. If that happens, then, you don't need to be that kind of creative in your mind to think that Bitcoin can drop quite a lot. And that's the problem. Price by the end of the year.
We're about 6 weeks away now from New Year's Eve.
I'll say you have reached 150 before that, and you have seen a small decline into 135 around New Year's Eve. So I'll say 135 for New Year's Eve, and then you're going to see somewhat of a bounce into the early part of January. So I think which will bring us back up to 140 something. So I think you're going to see, let's say 135 by year end, and 150 has been the top at that point.
Despite the long-term risks, the near-term outlook still calls for one final surge. According to the analysis, Bitcoin may hit $150,000 before year-end. The year could close around $135,000 after a modest pullback. Early January may bring another bounce to the mid-$140,000 range. This would mark the likely top before the macroeconomic environment turns decisively negative. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.